the risk is totally different. It's a completely different risk. I would love to be able to say that, hey, every guest is going to treat your property as if it was a long-term rental or as if it was their own home. But I mean, it's just not the case. I wish it were the case, but it's just not the case, and the risk is different.
If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called the Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below. Hey, how's it going, everybody? So today we have with us Elaine Eugenio, and she's going to talk to us about what she does as an insurance agent. So Elaine, welcome to the show.
Thanks so much for having me today.
Awesome. Hey, so I'm going to talk a little bit about your background because it's a very impressive background. So Elaine is an award-winning 11-year insurance agency owner who got her start in insurance in the most unfortunate way possible. At the age of 19, she was in a horrible car accident right in front of her parents' home. She totaled her car and proved just why the teenager rates are so high. Regardless, her insurance agent at the time offered her a job. Scoffing at the idea of being a stuffy insurance agent, Elaine kindly turned down the job offer, explaining that she just couldn't see herself doing insurance. But little did she know that in 7 years, she'd go back to her agent, but instead of asking for his original offer, she explained that she didn't want to work for someone. She wanted to work for herself. So during the time between that car accident and the beginning of her insurance career, Elaine held different positions in different industries and credits most of her success to having these experiences. It is due to all those different career paths that has enabled her to bring a different perspective when it comes to working with investors, realtors, general contractors, lenders, homeowners, and business owners. So aside from being an active owner in her agency, Elaine has dedicated a majority of her career in raising awareness and funding for local elementary and high schools, as well as lend her insight on local college level, where she currently sits on the business advisory board and where she recently retired a 2-year role as the chairwoman of the board. Elaine also continues to serve on the board of a local nonprofit that brings awareness and resources to local foster families and youth in care. So Elaine, whew, what a background.
I know.
Absolutely awesome having you on.
Thank you so much. I appreciate it. It's very humbling to hear somebody else read that, and I've never had anybody else read it. So thank you for that.
Yeah, no worries. So I want to ask you the same question I ask everybody, the way we get these things started. So I talked a little bit about your background. So if you could just tell us a little bit about yourself and share your story, go into as much detail as you'd like.
Well, a little bit more about myself. I live in the Pacific Northwest. I live in Seattle specifically, and I am married. I have a 3-year-old, and we travel quite a bit. And I've spent the majority of my career either working long hours and then just sort of crashing and taking some vacation time, and spending 2 to 3, 4 weeks out of the country, or if I can. Can't do that much these days, but I'd love to get back to that. Right now, like I said, I'm an active agency owner, and what that means, because I think a lot of people get a little confused by that term, is I actually do sit in my office. I talk to clients. I have staff. I talk to staff. I manage the day-to-day. For some people, for some agency owners, that might not be the most ideal situation for them, and to each their own, but I really love it. And one of the things that I love about being an agency owner is I get to talk to people about their dreams. Don't get me wrong. Sometimes I do have to talk to people about some of the bad days of their lives, like those car accidents, or some of the really bad days if somebody passes away. But for the most part, I get to talk to people on some of the best days of their lives. And that's pretty great. Whether it's somebody getting married or somebody buying a new home or somebody buying that dream vacation home or somebody opening up a new business. Every day is different and it's kind of fun still for me.
Right on. So, okay. So I know some of these situations that you're talking about, that you say that you love, but what do you enjoy the most about being an insurance agent?
I really enjoy hearing about people's dreams. I love that. I love talking to people about their dreams. I love talking to people about the fun that they have in their lives. I mentioned earlier that I love to travel. And one of the things that I love to do while I travel is, really get into the culture, stay in places that, stay in usually in places that are other people's homes, and get to know the owner as well. And it's amazing talking to people. And what I really love about this job is everybody has a different story. But at the same time, fundamentally, we all have very similar goals and dreams. And I love hearing that.
Right on. Yeah. That's one of the benefits of being in a position like that. And for the short time that I've been a real estate agent, I see the same thing too, as you're talking to people, what some of their goals and aspirations are, whether they're buying their dream home for the first time or whether or not they're buying, a property that they want to rent out, whether it's a long-term rental property or a short-term rental property, which actually I'd like to talk to you a little bit about short-term rentals, because that's one of the things that we were talking about previously off camera. So I want to know, when it comes to insurance, right? Why isn't a regular landlord rental policy sufficient for a short-term rental?
Ooh, it's a really good question. I wish more people actually ask that question. A landlord policy or a long-term rental policy is exactly that. It's for your property being rented out in the long term. Long term is 12 months. Some people do 6-month leases, but really that policy is designed for a 12-month lease. Short-term rental policies or short-term rental insurance is for the short term. It's for that. I've seen guests I've seen hosts post up signs like, the minimum stay is one night. So as low as one night to 30 days or more. And so the risk is different. You want to make sure that you are taking into account the risk. When you have a long-term rental policy, it takes into account things like the property owner ran a background check. You ran a credit check. You might have run a criminal history background check as well. It takes into all of those accounts. You can't do that when it comes to a short-term rental. I've seen some hosts try and they've gotten quite a bit of pushback because nobody really does that. But, it's a completely different animal. It's a completely different risk. It looks the same. Don't get me wrong. I talk about the 4 basic coverages of insurance policies, whether it's a short-term or long-term rental policy, and they look the same. It looks like it's structurally the same, but if it's not written properly, there's no coverage.
Can you tell me what those 4 principles are?
Absolutely. You're talking about building coverage. So that's number 1. If you look at an insurance policy, the first line of insurance, a big top number, is building coverage. The second number is going to be contents. The next number or the next line is going to be loss of use. Or if you're looking at short-term rental policy or even a rental policy, loss of revenue. And then the last line is going to be, well, it's not the last line, but the 4th line is going to be liability coverage. And those are going to be the 4 basic coverages of a short-term rental policy. Now, going back to your first question, you asked me, what's the difference between a landlord policy, a long-term landlord policy, and a short-term rental policy? The liability is different there, or a homeowner's policy. When you are in your home or you're renting it out as a long-term, it's different kinds of liability. Like we talked about the risk earlier, right? Different kinds of risks. You ran a background check, you did all those things. Short-term, you don't do those things. So liability coverage is super important, especially when it comes to short-term rental policies, because you want to make sure that you are as protected as a property owner as possible, because you weren't able to run those credit checks or those background checks as you would have normally done.
All right, right on. That's great information to know. So speaking of things that people need to know, like if you have a short-term rental property, it's a little bit different than a long-term in regards to, you have a high turnover rate. So do you have to let your mortgage company know if you have a mortgage out on that property?
Good question. We get this question a lot these days because I know a lot of people out there buying those second homes and they're telling their mortgage companies that, oh, this is our vacation home or this is our secondary home, right? As a real estate agent, I'm sure you see that a lot. It depends on how you are going to use that property. And I'll give you one of the number one ways people use their short-term rental policy property is they put it on Airbnb and they put it on VRBO or HomeAway, but they also use it themselves. And so, there are insurance policies out there. Don't be afraid to tell your insurance agent that I am going to be using this too, but I would also like to put it on Airbnb or VRBO. There are policies that will completely cover you. It's completely okay that you do this, and your mortgage company, they won't even bat an eye. They will not bat an eye. Now, that being said, let's say you buy a property and it looks like a regular homeowner's, you purchase it as your primary residence, but you're trying to put it on Airbnb or VRBO. That gets a little bit tricky because chances are you got a lower interest rate, saying that it was your primary residence. And so your mortgage company is going to expect an insurance policy that just states it's a homeowner's policy. When you start putting things like, we talked about liability earlier, it's going to say general liability. That's a red flag that this is not a personal lines homeowner's policy. This is a commercial policy, which will trigger a question from your mortgage company saying, is this are you receiving revenue from this location? And if you are, that's a conversation you have to have with them. But yeah, you do have to, especially in the very beginning, just be as honest as you can with your lender.
I did notice, on my rental property too, that my insurance, the rates were just so much higher for that. Now, what about, and that was a long-term rental, but from what I understand, people with short-term rentals, the premium seems like it's just so much higher than a regular rental property or even just a homeowner's policy. Why is that? I'll
be the first to admit, when people ask me, when property owners ask me, is it going to be more than my homeowner's policy? Is it going to be more? If they always tippy toe around that question, right? Is it going to be more? How much more? It's
because they already know what the answer is.
They know, and I appreciate that they know, but they're hoping, they're like that kid who's keeping your fingers crossed. The risk is totally different. It's a completely different risk. I would love to be able to say that, hey, every guest is going to treat your property as if it was a long-term rental or as if it was their own home. But it's just not the case. I wish it were the case, but it's just not the case. And the risk is different. I've seen guests who have taken baths and they've forgotten to shut off the water because they just aren't used to that kind of, knob. It's not their normal bathtub. And you got that kind of thing in play. It's not their normal home as well. It's a completely different risk.
So you're saying make sure the bathtub isn't too bougie.
And what's interesting is, those jacuzzi tubs, they're fantastic. I don't know a single person who doesn't want to use one when they're on vacation, right? But just know how to work it or know to shut it off. But it is kind of amazing that it's not your home. It's as I have stayed in fantastic Airbnbs and VRBOs, and I have to be very mindful and I have to remember it's not my home. So even something as simple as burners. You go into somebody else's house and you're cooking up a meal in front of the stove, and I don't know how many people it's never the same. The burner for the front or the front or the rear is never the same, for it. So it's kind of the same thing. It's not somebody's normal home. They're not used to the property. And I hate to admit this, they're never going to take care of it as much as if it was a long-term rental or their own home. And because of that, we take that into account as an insurance company, as insurance carriers. We have to take a look at the risk. Now, that being said, it's still a relatively new industry. when I say relatively new, it doesn't seem like it should be new. Like people have had vacation homes. They've had, there's that company Vacasa that's been renting out vacation homes for years. But when we talk about Airbnb and VRBO, and we talk about all those small, like even booking.com, these are places that have, very little, they're not able to gather as much information as the property management companies that place your properties with other people. And because of that, the risk is just too high. We're essentially banking on the fact that your property is going to have a loss or in your area. And we see this happen quite often where there's quite a few Airbnbs or VRBOs in a certain area, and they see a lot of losses and they see a lot of claims. And it's like normal insurance. It's condensed in one area, the rate is going to be higher in that one area.
Right. Yeah. Because especially when you have it all condensed in one area, you have a lot of people having short-term rentals there. I guess it's, it's treated almost the same as like a resort area or a hotel area. And there's the people that are staying there have less and less accountability. And it could even be somebody else staying at a different place that does damage to your property. It's just that something was going on and they were there.
Yeah.
So, yeah. Okay.
And that's
understandable.
You actually bring up something that's, I think, very big right now in the industry is we're getting hosts who are getting requests for having weddings or parties at their place. And the hosts are sitting back here going, my place, you can, it beds at least in the most 8 people. You can have it at the most 8 people just staying at that place. Why would you think you can have a wedding, even a small wedding or a small party at my place? And I mean, thankfully, some guests do mention that, hey, I'm going to have a party kind of off the cuff, and it is up to the host. I see a lot of hosts who question themselves, should I say no? And, if your place only is able to hold 8 people and the person is saying that they're going to have 25 people, you should say no. And we just want to make sure that everybody is protected, because if somebody has a party at your place and they drink and they've had a little too many, and they go off the property and they get in a car and they get injured, or worse yet, they injure somebody else, they're going to be asked, where are you coming from? And they're going to ask for the location of where you're coming from. And I would not be surprised if you got a summons or you got a letter, say, as a property owner saying, hey, somebody was injured leaving your property. Yeah,
that's a very good point. I almost wonder, like, if somebody was going to have some type of party or a wedding or something like that. I guess maybe look at things that are a little bit more reasonable, right? If somebody wanted to have a wedding at one of your properties, like let's say you have a really nice waterfront property, maybe for something like that, you would do like a separate charge or do something, separate from that, just to annotate that this is, something different than staying at the rental property.
Absolutely. And I think that more and more hosts are getting smart to that. And again, it's one of those things, just tell your insurance agent, if you have a fantastic, I mentioned earlier, I live in the Pacific Northwest, an hour and a half away from downtown Seattle is this place called Suncadia. And there's Suncadia Resorts, and there's all these VRBOs and Airbnbs in the area, and they are on the golf course. You could have a wedding in one of these big houses that has a pool and it's on the greens. You could have a wedding there, and that's all good and fine. Just let your insurance agent know. Just let us know that you're going to have a wedding there and you have events, and we can rate for that.
Right on. So going back to what we were talking about with the actual premiums being so much higher for like a short-term rental, are there anything like I can do as a owner of one of these short-term rentals? Is there anything I can do to try to make that premium lower?
Yes. This might be an unpopular opinion, but there is nothing wrong with having security cameras on your property. Just disclose it to your guests. Obviously not on the inside, but outside, having security cameras, having an alarm, an active alarm, having a centrally monitored alarm, having that device that can read if there is standing water, an alarm goes off and you're notified. That will save a lot of places, especially that are seasonal locations. We're talking about the places that are, high season in the summer, and then again, high season in the winter. But those kinds of items, especially this day and age where you just want to make sure, and there's so many hosts out there who their property isn't even in their state. We want to make sure that everybody is aware of whatever is going on the property. And there's also something that most hosts can do, and you can get a safety certification for your property. There's this really great company called Breezeway, and I love Breezeway. I kind of went down the rabbit hole and I was like, what exactly do they do? Because they do a safety certification for rental properties. And I have a rental property as well, short-term rental property. And I'm going to put my property into their program and see if I fail or pass, hopefully pass. You can get that certification. And for some insurance carriers, your premium could be reduced by a good 10% annually. That's a pretty good savings.
Okay. Yeah, right on. So after you put yours through there, I'm assuming that you insure yours through your own insurance company.
I do.
Now,
I do.
Would that certification lower it from you guys?
It should, yes. Okay. I'm actually very nervous about this because we have a family beach house right on the water in Vashon Island, and it's fantastic. We use it as well. We use it ourselves, and we put it out on Airbnb and VRBO. And we're a family, actually just VRBO. We're a family-oriented beach house. And so for me, it's a really big deal because my kid is running around, and I want to make sure anybody else who's got the kids that come on the property, and usually we rent it out to families, that their kids are safe too. So I'll let you know how this goes.
Awesome. Hey, so actually, since you bring that up, that, with your rental property, you guys also use it for the short-term rental, right? Does that make any type of difference, with you and your family using it versus, or even like close personal friends using the property? Mm-hmm. Would that make a difference? And I guess maybe depending on how many uses per year on your premium?
You asked me, I'm going to go back to a question that you also asked about, like, what is the difference between like a regular landlord policy or a homeowner's policy and a short-term rental policy, right? I'm going to throw something in there, and I've seen, if I were to be on the property and I was using it and I invited friends over and we stayed on the property, which I plan on doing sometime this summer. And my policy specifically allows, it's a family vacation rental property with allowing short-term rental on there. And so when my friends are covered, I'm covered, we're good to go. But when you are, I mentioned earlier, if you are just using this property as an investment property, there is no personal liability associated with a commercial liability policy. You at least have to tell your your insurance agent that, hey, I plan on also using this. Is that okay? And you can, if it's okay, make sure you get that in writing, even if you don't see it on the policy. But you should be covered still as long as you disclose that to your insurance agent. Now, this is actually a question that I get asked quite a bit these days. What if I am renting out my property to a friend, right? My friend is staying on my property. They've gone through the channels and now you've exchanged funds. They're a guest. You are the host and they're a guest, but they're your friend. Like, is there coverage? Absolutely. We're going to treat that like it's a normal transaction.
Okay, right on. So when it comes to like the difference in these policies, right? Because we talked a little bit about, the difference in like pricing for like the premium based on what it is, but what are some of the differences in coverages between a short-term rental insurance and a homeowner's insurance policy?
The liability coverage is going to be the very, very first thing there. It's there's a difference between personal liability and business liability. Because remember, you are getting you're getting money. You're getting money for putting your place up on VRBO or Airbnb. And because of that, it's considered a business. And because it's considered a business, there's a different kind of liability risk, liability aspect to that. So personal liability, general liability, commercial liability. If you have a regular homeowner's policy and you are putting your property up on those short-term rental sites and somebody trips and they get hurt, there is no coverage. And the reason why there's no coverage is because your homeowner's policy, like your mortgage, is designed for yourself and your family to be using that property for personal use, hence personal liability. As soon as you take money, that's a business use. And because of that, you need business coverage for it. So that's why even if you get like let's consider a personal lines, short-term rental policy, it still takes into account that liability aspect of, so if somebody gets on that property and trips and falls and they're not a family member and it's a guest, there's going to be coverage for that.
Okay, right on. So, okay, I have something to add on to that. So if it's counting now as a business because you're collecting revenue from it, would it make a difference if you have that rental property falling under an LLC versus just keeping it as a personal property?
I'm gonna have to say that you're gonna have to talk to your lawyer about that. But as the insurance agent, I would love for you to put it under an LLC. What insurance is supposed to do is it's supposed to create a barrier between you and somebody that sues you, right? So that the bigger the barrier, the thicker the barrier, the less of a chance of you yourself getting touched by somebody suing you or getting affected by somebody suing you. I would love to put it under an LLC. I would love for our property owners to put it under an LLC. Sometimes it's just not the case. Sometimes people don't see the value of that. There are quite a few people that I would say that have just been like, even clients of ours have been like, I don't need to do it, but I want to make sure that I'm still protected. So get me a really big umbrella policy. And that's kind of how we combat that, right? So if we put it under an LLC, a lot of insurance companies, when it comes to short-term rental insurance, will allow an LLC to be the named insured. So the first person on the insurance policy. And then we can still have your name on that policy as well. But I mean, we have plenty of people these days who are like, I don't want to go through the hassle of an LLC. I know we're a business, but I don't want to have to go through the hassle. So just make sure that we have big enough umbrella policy.
Right. Yeah. Make sure that insurance policy is going to have enough coverage in case, the worst happens. Yeah. Well, speaking of coverage, this is a good segue into my next question. So what are the basic coverages for a short-term rental policy? I know we talked about the difference in liability, but what are some of like the basic coverages, like the needs that you have to have?
Okay. So first coverage is building coverage, right? Building coverage. Next coverage is contents. Next one is loss of income. Super important. I don't know why number 3 always gets forgotten. I do comparisons all the time. People send me over their deck pages and I'm like, where's your loss of income? You're getting money from this place. And of course, liability coverage. So those are the 4 basic coverages. First one is building coverage. Oh my goodness gracious. Please, this is your home, your personal home, your vacation home, your property, your rental property, whatever you want to call it. Just make sure that if that place burns to the ground, that you can rebuild it. I don't care if you have a mortgage or not. You want to make sure that you have enough building coverage to rebuild your property the way it was. That being said, I always use the example of fire. We'll use the example of like a water, like a pipe bursting inside the house or a bathtub that overflows. One of my very first short-term rental claims this was horrible. Bathtub is on the second floor. Great bathtub, right? Bathtub is on the second floor. It must have happened the second or the third day the guests were there, and it was like a 5-day stay, and they overflowed the bathtub. The bathtub.
Was it a bougie jacuzzi tub?
It totally was.
See, this is what we're talking about.
It totally was. It had a really great view of the sound. It was fantastic. You want to make sure. And what ended up happening, of course, do you think that they told their host that it happened on the second or third day? Do you think they told their host at all?
Probably not.
We
waited until after their stay was over and put it in a review.
They didn't even. Good Lord, I hope not. They didn't even tell their host. They grabbed the shop vac from the garage and tried to dry it up themselves. Oh
my goodness!
But what ended up happening and how we figured it out, and this is why you should have good cleaners who actually do these checks. It was like the carpet was still damp, and not only that, there was like a wet spot in the ceiling downstairs. And so we figured out what had happened. And thankfully we had just 2 months prior had convinced these homeowners to like get short-term rental insurance. Like, I know what you're doing. I know you're putting their place up on Airbnb. I mean, it's gorgeous. Like, you barely use it. I know you're doing this. And they finally caved and they said, fine. And of course, 2 months later, they have this water loss. And you don't think that water like costs a lot of money to fix. You think you want to pay that out of pocket? No, water travels. It was a lot. It was a pretty large loss because it had been going on. It was like almost a week. But those are the 4 basic coverages. Going back to that. So that's building coverages. And then the next one is going to be contents. Contents is like everything inside your property that you need in order to just furnish your property. Everything that dishes, everything in the kitchen, by the way, people don't realize that how much stuff they actually have in their kitchens. So dishes, plates, pots and pans, all the bedding, all the towels, all the sofa, everything in your property, that is considered contents. You want to make sure you've got coverage for that. And then loss of income. Again, I don't know why people forget loss of income. Loss of income to me is probably the most important one next to dwelling coverage, only because you want to make sure that your revenue is protected. I don't know why there are so many policies that I see out there that they just happen to not have loss of income. It's really not that much more to add it to your policy. But like, I talk to people whose properties, they take in $100,000 in revenue a year, which is a lot of money, especially only being used up for 30% of the year. And you want to make sure that if anything happens, and of course, what's going to happen? There's going to be a loss like during your high season, right? So you want to make sure that you get your money from that. The next coverage is liability coverage. We've gone over personal liability versus business liability. You want to just make sure that your policy is written correctly, and there's liability coverage. Talking about an umbrella earlier, make sure if you have a high value property, it's really easy to go online to see how much somebody's property is worth. And I can do it. Anybody can do it. And to just say, okay, well, I got hurt. Well, it doesn't matter what happened. I got hurt. It doesn't matter if I'd been drinking. I got hurt. And I need you to either pay for my medical expenses, or I am going to sue you. We want to just make sure that you have sufficient coverage for that.
Okay. So since you're a short-term rental host yourself, I've never had a short-term rental property. So I've got a question on if I was to get started, what should I do? Like, how would I get started on becoming a host?
I would say first and foremost, let's say you have a vacation home. The most common situation that we see from people is, I've got a vacation home. I barely use it. I barely use it because, things happen. I don't use it as often as I thought I would, or my kids are older. And because my kids are older, I'm not using it any longer. And if that is the situation or the scenario, then think about what kind of host you want to be. Do you want to be a hands-on host? Do you want to be the person that's doing all the cleaning? Do you want to be the person that's setting up all the bookings? Or do you want to get a property management company? Or, this is controversial for some people, or do you want to start doing co-hosting? Do you want to have a co-host, not necessarily a property management company that takes over everything, but do you want to be a co-host? And I think that that's setting expectations for what kind of host do you want to be. It's probably the best thing that you can do, especially if you're wanting to get into the industry, is, not just trying to find that property. The real estate market is crazy out there. So I don't know. I can't help you with trying to find that property. All I can do is say that, you want to make sure you talk to your real estate agent and run some comps, run some numbers, and go on Airbnb and VRBO yourself. But try to figure out first and foremost, what kind of host do you want to be? And then go from there. If you want to be a host that wants to be hands-on, just make sure you have a good team with you, your cleaning person, your maintenance person. And then you do all the steps yourself. Or do you want to be a host where you have a property management that takes, 10 to 30%, which is standard? I think that a lot of people are surprised by that. Or do you want to share some of those responsibilities and do co-hosting, which co-hosting or arbitrage, or however you want to put it, that has been a situation where that's been popping up recently. And I've been seeing more and more people that have been looking into that.
Thank you for explaining that at the end, because I was actually going to ask you, I can kind of have the idea just based off the name of it, but what is a co-host? So thank you for clarifying that. But, another thing that you said there, and I like to write down notes as we're going. And I see this as a theme, whether or not it's short-term rental properties or, you're renting out properties from a distance, like long distance rentals. The most important thing, and you hear this all the time, is building a good team,
mm-hmm.
right?
Absolutely.
With that being said, with having to build a good team, what other few pieces of advice would you have for a new host? Let's take a brief moment to hear from our show sponsors. What's going on, everybody? So I am happy to announce that we now have our video and audio editing services live. So whether you're starting a brand new YouTube channel or a podcast, or you're already established, we have services that'll fit your needs. Go check it out, www.averagejoefinances.com/services, and you can see all the services that we have to offer, including our newest audio and video editing. What's going on, everybody? So today I want to talk to you about Wealth Tender. If you are a finance content creator, whether that's a blog, a podcast, you're a financial advisor or a financial coach, I highly recommend you check out Wealth Tender. Wealth Tender is building a database of all the top finance blogs, podcasts, and the financial advisors and financial coaches that they have on there are vetted and top notch. So we actually had the pleasure of hosting Brian Thorpe, the CEO and founder of Wealth Tender, on Average Joe Finance's podcast, episode 25. Go check out that episode, listen to his story, and listen to him talk about the database that he's building. It's really phenomenal stuff. So if you're interested in checking out the directory, or if you're a finance content creator and you're interested in joining up with the directory, go to the link below in the show notes or check out www.averagejoefinances.com/wealth-tender. Let's get back to today's episode.
Be realistic. I mean, that sounds horrible, but please, please, please be realistic with what you are looking to get out of this property. I think one of the biggest mistakes that I see hosts make is they feel like they can do it all. And whether that's cleaning and the maintenance work and the bookings, that's a lot. I am really fortunate. My sister-in-law, my brother-in-law handle the bookings, and we have a wonderful cleaner and a wonderful maintenance team. But I do see hosts, their biggest mistake is they feel like they can do it all with very little experience. The second thing that you can do is, aside from being realistic, is do your due diligence on that guest. I mentioned earlier, we can't run credit checks. We can't run background checks. We can't run all those reports on our guests. You could try. I know everybody has gotten some pushback from it, but do your due diligence. Ask them the questions. Make sure they're aware. If you get a funny feeling, go with your gut. I'm going to put a little plug in for people in my industry. Talk to your insurance agent. Talk to your insurance broker. You want to make sure that everybody who is on your team, whether it's your whether it's your cleaning person or your maintenance person, but your insurance agent should be somebody that's on your team. You should have that person on your team, because don't Google it. I think a lot of people Google it, right? Just make sure you know what you want to do, how you want to use a property. I mentioned events earlier. If your property is large enough to host large events, of course, let your insurance agent know, but also realize the implications of what hosting an event looks like. There is a reason why you have a wedding and it's like the venue is like $3,000, because there's a lot of liability involved. There's a lot of cleanup. There's a lot of that. Just know what you want out of the property. And, I think a lot of times property owners, especially when they are the owner themselves, and it's not just for revenue, but also for personal use, they kind of go into thinking, we'll see how it goes the first year, but then they do it all themselves and they don't ask themselves those questions, and they get burned out, which is really horrible, because there's a lot of really great family owned properties out there. But just do your due diligence, be realistic, and have a good team.
I like it. Yeah. It's great, because that was actually a question I was going to ask you next was, what are some of the biggest mistakes you've seen? So I'm glad you went right into that. So there's actually something else I want to ask you. I wrote this down because when you had mentioned it before about the co-hosting part, you had mentioned something called short-term rental arbitrage. Now, I've heard of this before. I've actually watched a couple of YouTube videos on it with some people that I know that actually do this. But if you could explain for our listeners, what is this short-term rental arbitrage?
There's a spectrum of arbitraging. There are some property or co-hosts out there. And I'm going to put that in parentheses right now, because it really depends on like the level of involved, like how much they want to be involved with the property owner. But there are some co-hosts out there, or hosts that are arbitraging right now, where they'll take a space and they are leasing it out themselves. So they're leasing out the property themselves, and they are putting in their own personal stuff, and they are renting it out on Airbnb and VRBO, right? So that's one level of arbitrage. They've got a lease with the property owner, which is fantastic. I always feel like that might be the best case scenario for a lot of people, but it's just being realistic as well with how much money that they're going to actually be taking in, because there's going to be some low months. But then, you get the other end of arbitrage, where it's a property owner and it's all of their own stuff. And it's their property. I mean, when I say all of their own stuff, I mean their dishes, their beds, their sofa, everything in there is theirs, but they don't want to manage anything with the property. So they have somebody who goes in and says, okay, well, I'll manage everything for you, and I'll just take a percentage. So I'll manage the bookings, which I don't know if for all you hosts out there who've done it yourselves, if you're in the high season, it's a lot of work managing those bookings. So we'll manage the bookings, we'll manage the cleaning, we'll manage the maintenance of it, we'll manage any claims, and we'll just take 30%, up to 30%. But that is something that I am seeing more and more of. I will never forget the first time somebody came to me and said, I'm thinking of renting the space out or taking this space and it's not my stuff and it's all their stuff, but I'm just going to co-host it. Like, can I do that? And I remember thinking it's doable. It's absolutely doable. But what are the liability concerns on that?
I'm going to jump in on that because one of the things that I've seen that some people do is they will go rent someone's property, just a normal rental, and they'll pay their monthly rent, but they're not actually staying there. They're doing, they're Airbnb-ing the property or doing VRBO. Now, for the person who's renting it to that tenant, what type of responsibility do they have if the tenant is now arbitraging that property? And let's just for liability purposes here, let's just say that the homeowner does not know that the tenant is doing that. What kind of situation are you in? I
was going to ask, is this illegal? Is this a legal arbitrage? Because there is such a thing as legal versus illegal arbitrage, right? So this is a situation that you're giving me is what I would call an illegal arbitrage. You are subleasing it essentially. So we see this a lot with apartments and even homes on the lake or on the water. And that's tough because as the property owner, let's say I'm the property owner and I rent out my place on the water to somebody for a long term, like it's a 12-month lease and they're renting it for 12 months. And I assume that they're there for 12 months, but they're not doing that. They are not living there. Maybe they are living there, but then they're renting it out on Airbnb and VRBO. We see this often as well. Is my insurance going to cover a situation where somebody trips and falls on the property or somebody, there's a water claim or worst case scenario, the place goes up in flames? That's a no, because the policy that I have would have been a landlord policy. It would have been a long-term landlord policy, right? And that would have stated that I did my due diligence. I ran a criminal background check. I ran an eviction history, things like that. And I have a long-term lease. I have a lease that states that this person is going to live here, which interestingly enough, that person has that same lease because they signed it too when they said that they were going to live there as well, right? But they're not.
Right.
So if the place burns down, or let's say somebody trips and falls, and there's a claim, there's a loss, is my insurance, my long-term rental insurance going to cover it? And we're not going to cover it because that's not how the policy is written. Could you argue that, well, I didn't know? You could argue. That's a lot of arguing. And essentially what would happen is hopefully that person who was arbitraging your property, hopefully they got insurance themselves. Even though they weren't allowed to be essentially subleasing the property, hopefully they got insurance themselves, and hopefully their own insurance is going to be taking care of that liability concern. Right. And people don't realize this but will that cover like if the place burns down? No, because there's not dwelling coverage on that policy. Because you don't own that property. It's not like you were renting it. There's no dwelling coverage that you needed to cover because you didn't own it. And so if that place burns down or if there's a water loss or if anything that happens like that, it would have gotten kicked back to the property owner. And that's where people who are illegally arbitraging get in so much trouble because there was a claim. And what are you going to do? You can't lie. And I just want to give you guys a heads up. Insurance adjusters, insurance companies, we've gotten really smart. And there's a lot of areas out there that, an adjuster will look at it and like, this looks like a short-term rental property. And we'll look it up.
It's not hard to even just go on, VRBO or Airbnb and just look up the address and, that's one easy way to find out. What if the property owner in the lease allows subletting, right? But,
not sure.
The property owner probably is under the assumption that the person would sublease it to somebody who's also a long-term renter. Would that make a difference though if the lease allowed for that?
No. I'm going to say no because first of all, usually when it comes to subleasing, right? When it comes to subleasing, it is in terms. There's usually an approval clause. The person it's being subleased to there needs to be approval from the property owner. I mean, okay. And so, and it has to be another long-term lease. a long-term
No,
period.
that makes sense. Thanks for the clarification.
Yeah.
It's always about, the devil's in the details, right?
Yes. And actually, well, I only know that detail because I've been asked this question before. People are getting sneaky. But if you are renting, and if they do allow subleasing, it's still that policy that's written from you have to fall back on the property owner. That property owner's insurance policy is a long-term rental policy. You're acting as a long-term rental landlord. I tell clients all the time because I cannot tell you in the last 5 years how many times I've had an insured come to me and say, hey, that property that I have, it's like I had a long-term rental and like we're turning it over. Well, somebody just came to me because they saw it on Craigslist, or they saw it on like johnelscott.com being rented out for long-term lease. They came to me and they said, hey, I want to use your property as on Airbnb and VRBO. Like first and foremost, I asked them like, well, what do you want to do? You tell me what you want to do and let's see if we can make it work. And I'm like, well, I don't know. Like, I don't know if I should do this. I don't know if I should do that. I'm like, when it comes down to it, you need to make sure you are comfortable with whatever you're doing. But if you are renting it to somebody and it's a long-term lease, you can't, and they have a claim, there's no coverage, whether it's liability, whether it's our dwelling coverage, there's no coverage for that because we'd be writing this policy as if it was a long-term policy, and it's not the case.
Thank you so much for that clarification, because a lot of times, some of these YouTubers, I'm not going to name any names, but some of the videos that I've watched, they were talking about, I do Airbnb arbitrage. I go rent this place from this person, and then I don't even stay there. I Airbnb it out. And, I've always wondered, like, does the person that owned that property know that you're doing that? So a lot of times you don't see some of that clarification. So I wanted to ask that question, especially if we have listeners that are listening to this right now that are considering doing some type of co-host or Airbnb arbitrage. Really take that into consideration and make sure you have all the dotted lines checked and the I's dotted and T's crossed, because you don't want to get yourself in trouble.
That's our disclaimer, right?
Yeah.
That's our disclaimer.
Just put that out there right now.
Can I share a story real quick? I have one of my years ago, if you're a host and you're listening to this, do you remember when Airbnb had community managers? And these community managers would go into certain neighborhoods. My neighborhood was one of them, where they would go into the neighborhoods and they would talk to talk to hosts about Airbnb their properties. And I lived in this little part of Seattle called Ballard, and Ballard is super trendy, super popular these days. And I was asked by Airbnb, the person who was the community manager at the time, to sit in on the meeting and to do a 10-minute presentation about insurance. And I will never forget. And I always ask the same question every single presentation. How many here, raise your hand, how many here actually have the right kind of insurance? Right? And in a group of like 30 to 45 people, can you guess how many people raise their hand?
3. I'm going to go with 10%.
2 to 3. Yeah, you're right. 2 to 3 people. Yes. Always 10%. Why is it 10%? And then one person came to me like after the meeting and said, okay, so I have this situation. I need to get insurance for this. Can you help me? I'm like, okay, well, what's your scenario? She had an apartment, a really great place in Ballard, and she was renting it out on Airbnb. And I go, do you own the apartment? Because some people do call apartments or condos apartments. She's like, no, I just lease it out. I'm like, okay, does your landlord know that you do this? Well, do I have to tell them? Yes, you have to tell them. And chances are 100% of the time your landlord is going to say, no, you cannot lease this space on Airbnb. It's a liability risk. When it comes to especially those apartments and those shared spaces, it's a huge liability risk. I want to give you a worst case scenario. What if somebody gets on your property and they get injured? Not just they trip and fall, but it's assault. Who is going to be on the hook for that? Is there coverage? And I'm going to tell you right now, as an insurance agent who insures apartment buildings and insures condo buildings, we don't allow, it has to be a specific policy in order to allow this. So I'm going to say in general, 90% of the time, 95% of the time, we don't allow that kind of short-term renting. And it's probably, if you're a condo owner, it's probably not in your CCNR. It's not allowed. And if it's not allowed and you're doing it, and your tenant is doing it, there's no coverage if somebody gets hurt. Our biggest fear if somebody gets like physically hurt from assault. That's a tough one. In my own condo building, we actually had a few people. Like, I kind of figured it out. Like, we'd have a guest on our floor, like a different guest every so often. Had to go to the property manager, and the property manager looks at me and he's like, "Are we covered for that?" "No, you're not covered for that. Absolutely not."
Right on. Yeah. So thank you. That story actually like gives a lot of clarification too. So, and unfortunately, having a true story like that, and it's weird how that number is like always 10%, people that actually do it right. But okay, cool. So I want to ask you a couple personal questions, right? Because of what this podcast is about. So I know you have a short-term rental property. So what are you doing, you personally on your journey to or in financial freedom?
With the short-term rental property?
Or just in general, what are you doing to get yourself financially set?
I am a big believer in making money work for you. Sometimes you have to, and this is an unpopular opinion, sometimes you have to go into debt to make money work for you. I own an insurance agency, and there have been times in the last 11 years that I have had to take out loans and then pay them back, and then take out another loan to do something and then pay it back. Has it always been for something that has pushed? It's always been for something that has been able to push us forward, to allow us to grow. And that's one way that I use money to make sure that like I have a financially sound future. And not,
right.
that's
so
not,
you've
that's
been leveraging debt.
Yes. And that for some people, they'll hear that and they'll be like, "Oh, that makes sense. Right on. Awesome." And for some people, like, "Oh, I don't like that." But it depends on your comfort level. And, I'm also a financial services rep. So I will always tell people, like, it depends on your comfort and your risk level. What are you willing to risk, and what's your time horizon? And for me, I want to have not just a big agency. I know some insurance agents go out there and they're like, "I want to have a really big insurance agency." I'm like, I want to leverage debt, leverage money in such a way where we're sustainable and we're able to push forward. And it's, if I have a loan out there that's a contract value loan, it's something that's there for just in case, why not? If it allows me to do that, it allows me some comfort and allows me to not, I don't know if anybody else can attest to this, but when you're really stressed out and sometimes you don't make the best decisions, it allows me to not have to be in that situation.
So a lot of people that listen to this show are real estate investors, or they want to get started in investing in real estate. And, there's also a lot of people that listen to this show that are looking to get out of debt and to be able to start investing properly. Right. So I think it's a good thing to understand the difference, so I'm glad to see that, even with your insurance agency, that you're leveraging debt to accelerate your business forward the same way somebody in real estate would leverage debt to purchase more real estate, to accelerate their business forward. So it's good to see that you also treat it as a way to bring value to your business. So I've got two more questions, but one of them is, do you have any last tips or tricks that you would recommend for somebody that's looking to get into the short-term rental space?
Yes. Get a good real estate agent. I cannot stress that enough, because it's not just, be upfront with them, please, and tell them what you are using this property for. Your real estate agent, your local real estate agent, is going to be somebody who knows the area, and they can run some comps for you. And if they've never run comps for Airbnb properties, it's not that hard. You just go online and you just type in your address and see what pops up, right? And see what it is per night. I would say that, make sure, again, disclose it to them, check out the neighborhood, just know what you're getting yourself into, be very, very aware of if there is a lot of competition. And if there is a lot of competition, can it sustain one more property? What makes your property different? What sets you guys apart? I've been seeing a lot more people who have themed places, which are kind of cool. But just making sure that you have a good team, making sure your real estate agent is aware, making sure that you're being realistic with what your goals are. And, if this is something that you want to do and you want to build on, having a good process and procedure in place when you're I always want to say onboarding a guest, but when you have a new guest come in, and you kind of know, if anything happens, like if anything happens, what's the next step? What's going to happen after that? I have a tip for all of you hosts out there who are always frustrated with guests who, like, they call you for every little thing. Label everything. Please just label everything. Label where the the spoons are, label where the towels are, label where the kitchen utensils or kitchen appliances, like the pots and pans are. Label everything. It sounds so silly, but if you put a label on things, people can find it. If you've got guests who are fiddling with the heater or fiddling with the alarm, if you put up a little sign that says, please don't do this, or there's a $250 fine, chances are they're not going to fiddle around with it.
Right on. Yeah. You know, one of the things that I've stayed in several VRBOs and Airbnbs, and one of the things that I've always liked the most about some of the hosts will leave like a welcome package, like a little guide on, you know, how to work the different things in that particular property, where certain things are. So even if it's not labeled, like I had a list, like I know where this item is.
Yes.
Especially when I went and stayed in Maui, one of the places that we stayed at, like here's all the beach equipment, and here's our chairs, the cooler, this and that. It's all located here. It was very helpful. So yeah, I think that's a fantastic tip. And you know, this whole episode, this whole interview, like I really enjoyed it because I think you're providing a lot of value with the information that you're putting out. So with that being said, if people want to know a little bit more about you and what you're doing, or they want to get in touch with you, where can people find information about you? Do you have a website or social media you can share with us?
I do. And I love social media. I gotta get on board. I know we talked about that recently. I gotta get on board with our Instagram page for that. But you can find more information at insuranceforhosts.com. You can email me at Elaine@insuranceforhosts.com, or you can email our staff at info@insuranceforhosts.com. Pretty easy. It is literally insurance for hosts, you know. But I would say the number one thing people can do is to just ask. You know, drop me a line, shoot me a quick email, give me a call, just ask the question. Don't Google it. I can always tell when my property owners Google a question before they ask me, because they phrase it in such a way. But, you know, I want to make sure that you have a good team, and it can be daunting out there. It can be a lot of fun being a host, but it can also be a little bit daunting.
Right on. And I want you to know, I didn't Google any of these questions I asked you today.
I appreciate that.
But hey, Elaine, absolute pleasure having you on the show. I'll make sure that we have all of those links in our show notes to make it a little bit easier for our listeners. If they just want to click and copy and paste, they can get there.
Thank you so much. I appreciate it.